I think it's the only food I eat, so it won't be hard to figure out how I died. All I ate was Trader Joe's food. Rise up, take down Trader Joe. All right. Yum, yum, yum. Holy crap. Well. Alpha traders. Good stuff. Market's looking snazzy. Right? We all know in the past streams, right? This is why we trade volatility. All right. Now, if you want to be a long-term trend trader, I got a surprise for you. We made a run at that first standard deviation on the weekly to the downside. Didn't quite get to my number. Could it still? Sure, man. Anything's possible in this market. We all know that. We all know that. But let's see here. So I had that set on the daily chart. Let's get these. Let me shift this up a little bit here. Let's see where this is at on the weekly. I need to go 15 bars and turn off the step line. Let's step line this down a little bit. 1. Let's go to bar 15. Oop. Step size for projection 1. Bar 15. 95.4% Laplace distribution range. Let's step that projection down to 1. Let's throw it on bar 15 for the 99.7% Laplace distribution range. Okay. So you can see on the weekly, right? Run up from 28. Yeah, 28K. Get this nice move. You know what? Let's see here real quick. Where's this projection starting from? Yeah, let's bring this big, bad Wolfie to the, let's go 85. Let's go 85 bars back. Yeah, we all know what happened with that little dumperoo right there. And everybody's like, this scamdemic was a black swan event. Really? Was it really? Not to an alpha trader. It was in the charts weeks ahead of time that this thing was getting ready to sell off. Right? Moral to the story, don't trade news. Ever. Show me the chart. Show me the volatility charts. I'll show you the news. There we go. Okay. Now you can see from after this dump right here, I'm not even going to give it the respect of calling what happened. So after this dump right here, right, and that was a major daily candle, guys. That was outside the 5th standard deviation normal distribution. Big time. I'm going to show you something, though. We'll move one of these PBs back here, and from the dump right here, you're going to see some magic. So right now, from that 38K low or $3,800 low, Bitcoin ran up almost to the 99.7 Laplace distribution on that projection. Now I've got this one started at the 28K low. We pulled back. Look at these two wicks, all right? Tested the top side of the 68.3 Laplace distribution range. Now, what do I think's happening here? This is why we use this projection model, and I'm looking to the end of the year. Let's put a vertical line right there, January 3rd. It's right at the end of the projection, too. Pretty fancy, huh? Now, let's throw a horizontal on the 95.4. Right there. So, by the end of the year, is Bitcoin running to the 95.4% Laplace distribution range? I think so. I think this is a good area, right? $122,700 Bitcoin. That is a great number. You know, at Alpha Trading, we don't pull numbers out of our butt. We use probabilities. It's a random market. It's the only way to track a random market. Sure, we can look at other stuff. we could pull numbers out of our butt, you know. Hey, I'm super bullish. Well, let's see here. You know, what's above us? Nothing. Price discovery is above us. So how do you predict a price? By using probabilities, by using a distribution model, whether it be normal distribution or Laplace distribution. I like the Laplace distribution because the Laplace distribution contains this beast that is cryptocurrency, right? We all agree it's a monster. Nothing does what cryptocurrency does. Period. The end. There's no argument, right? That's why go on the Tasty Trade and look at Tom's face light up as soon as somebody brings up crypto. He knows. These guys have been trading options their whole life. They see a volatile market like this and they're just foaming at the mouth, man. They are foaming at the mouth. And on one of the recent ones, he's talking about scalping the freaking volatility, scalping the delta, right, of the volatility of Bitcoin. Pretty powerful, man. It's like, we're not in this alone. These people are smart. They know. They know, right? They know 100% that that's what you do with futures. You scalp the delta. You use the futures to hedge your options positions. That's how you properly trade futures. You don't just get in long-term positions, right? That's not what you do. But hey, I'll tell you right now, if you're a long-term trader, you got a regular life. You're not a total freaking degen like me and some of the other guys in this Discord, sit in front of the computer all day long and scalp delta, right? So you're a long-term trader. You know, alpha trading is going to give you something to work with, right? Let's give you a little sneak peek real quick. Then I'll get back to this projection. Okay, so what we got here, this is going to be the alpha trading trend machine, or whatever we decide to call this whole thing. The step lines you're looking at right here, this is our ultimate power means, right? This is like 15 power means with a central power mean, which is the yellow step line. The white solid line, that's our reverse wave trend. You can see what happened here. So we start to run up from 10.5K on Bitcoin, right? We get some quick pullbacks to the central power mean. No candles close below that central power mean. Up and up and up. We finally break the central power mean. What catches? Where do the candles close above? Our reverse wave trend, where we have it set up for long-term trend, right? If you want to get in and out of all these little moves here, wave trend's going to be your best bet. This is a high length. Shorten it up. Shorten it up. Shorten that length up a little bit. You know, maybe you're out at this pullback. You're back in here. You're out at that pullback, right? You're up here. You're out at that pullback. I mean, there's plenty of ways to trade this. But if you're looking for, well, you want to freaking get in a trade, check it every couple days just to see what's going on with price action. Look how many times it broke the power mean several times, but you never got a candle close below the reverse wave trend. And it ran it all the way up. Ran it all the way up to new all-time highs up there at 65. We just got a new recent one, 67.1. This is looking really good again, right? So this is going to be powerful. We almost got reverse Fisher done. As soon as we get reverse Fisher done, we're going to add it to this. Hopefully we're going to code it all into one indicator, call it the alpha trend machine. Done. We've been promising this for a long time. It's coming. Trust me. You know, you're going to recognize what's it look like. It looks like some of the, you know, traditional technical analysis, the super guppy, where they just use MAs, right? These are power means, right? This is going to be very in the name, powerful. It's in the name, okay? Then you add in a reverse Fisher, reverse wave trend. It's going to give you a really good opportunity to be a trend trader. Whether you're trading the trend on the 4-hour, the 12-hour, the daily, the 2-day, the 3-day, whatever your addiction is, you know, you're going to be able to do that using one indicator. Let's get back over here. Boop. So yeah, I think Bitcoin's going to make a run up by the end of the year, and we're going to hit this 95.4. Hell, it could happen before then. Bitcoin's crazy though, and you never know with the adoption that's happening in cryptocurrency what this thing could do. When nobody knows. That's why we have these probabilities, right? Look at the 99.7. It's a $500,000 Bitcoin by the end of the year. That's going to be a powerful run. I don't think that's going to happen by the beginning of the year. But I could see this, I could see a $500,000 Bitcoin maybe by the end of 2023. Everybody's talking about, crypto, we're going to have this big pullback again, possibly go back to, 80, 90% pullbacks and stuff like that. The market is changing. That's all volatility. The volatility is changing as more adoption comes into this market. I do not think these pullbacks are going to be that extensive anymore. Could be wrong. You never know. That's why we've got the probabilities. And we're going to continue to use our projection bosses to predict. And as soon as we start getting that pullback, I'm going to be looking at downside probability levels. That's all you can do in a random market, really. I mean, that's all you can do. So we've got this other projection coming from the $3,800 Bitcoin low running up in the all-time highs. So what if it makes a run to the 99.7 by the end of the year? It's a $200,000 Bitcoin. I'm looking anywhere in between 122.7 and a $200,000 Bitcoin by the end of the year. Somewhere in this range. You got people talking about, 80K, 100K. Where are they getting these numbers? Share it with me. I don't care how you trade, right? It doesn't matter. Everybody's going to find their own little way to trade, whether it be traditional technical analysis, whether it be volatility, probability, and statistics. Obviously, that's what we trade here, and that's what we believe in. But we're not gonna hold that against anybody if they want to trade that way. Right? We're here for you if you want to make a change, if you want to come see what volatility, probability, and statistics trading is all about. All right, so that is the weekly. This gets. Let's see here. There's bear div building. There's bear div building between price action and returns. So what's that telling me? That's telling me either we're going to have a massive week, right? Whether it be this weekend or next week, you are going to want to see a higher returns candle. And if we really want to start making that move up towards that 95.4, you're going to want to see these weekly candles start to build. But hell, by the end of the year, it could be a stair step up, right? With nice pumps, with some nice, who knows what the pullbacks will be. Bitcoin doesn't make it easy. We all know that, right? That's why we can only go on the probabilities. We can only look at the volatility every day. And just to see the dynamics of the market, that this is why we trade this way, because you can tell when you learn how to read the volatility what's going to happen. I've showed several times how the volatility is what's creating the candlesticks, not the other way around. That's where people get a little confused and they start just trading candlesticks. Can't do that because the volatility is going to change from day to day. The candlesticks could be creating some bullish, crazy pattern, right? A lot of people like to trade patterns. What's creating those patterns? The candlesticks. But what's creating the candlesticks? The volatility. That's why literally, I don't think people understand, people get all excited when they'll see a head and shoulders. Do you realize that only about 25% of those head and shoulder patterns actually play out, right? Or ascending or descending wedges, it's something like only 60% of those play out. Patterns break. The math doesn't. The volatility doesn't break. The volatility is going to tell you what's going to happen in the market. That's all we're trying to say. So if you want to get to higher percentage trades, you got to understand the volatility. You just have to. Let me reload this chart now. Let's go back to the daily. Ding! There we go. Beautiful little daily chart. So you can see right here, right? We're getting a nice move back up. I didn't say that before. Let me change this real quick. Boop. Boom, boom. Which is okay. Our wonderful projection bosses. These things are incredible. We're about to take the world by storm, too. These bad boys. We got some things in the works. Let's see here. Let's save that chart. You can see what happened here, right? Look at this nice dump candle, the start of the pullback from the all-time high at 67.1, right? Look, we start to get a pullback. Builds some bull div over a couple-day period. The next day, we get a nice little bullish candle, right? And a bounce off of these 95.4% Laplace distribution projections, okay? Then what happens? Let's see. Let's see if that was continuing to build. No. We get another day. Pretty much, I mean, you can call it a candle backfill. I mean, that's what it was at one point, right? So you get this bump up in price action from the bull div between returns and price action, right? Lower lows on the price action, higher lows on the returns. So we get that pump. Next day, we get a backfill. Then, but what happened here? That bull div continued to build. Look, right? Higher low again. Higher low again. From this candle right here, it was definitely a lower low again. So we get a nice pop, right? We get another nice pop. But then we get a nice little pullback, right? Boom, boom. Let me see here. Was there any hidden? Weak bear. There was some weak bear div, right? But also, what else was going on right here? Why did we see all this movement in price action like this? Options, right? $3.2 billion of options were getting ready to expire yesterday, right? So everybody needs to take that into account. Over that pullback, lower lows, higher lows on the returns. So now we're getting a nice pop, right? I would love to see this daily candle close up by this first standard deviation. You know, are we going to get this $1,000 pump through the end of the day? It's about what it's going to take. Well, yet to be seen. We'll go into the other charts and see if that's a possibility. We'll take a look at the volatility. But right now, going into the weekend, here we go again. We're building bear div now. Higher high on price action. Lower high on returns. And I've talked about this a lot. It's the imbalance in buy and sell pressure that creates the divergence between returns and price action. That's all anybody needs to know. When you figure that out, and when you figure out what the returns actually are, it's the return on your investment, and you're seeing divergence build, it's telling you, hey, the return on your investment is diminishing. Take your profit. That's what we harp on, right? Take your profit, take your profit, take your profit. Please, for God's sakes, take your profit. Look what happened to the Shiba people, right? I was over in another Discord, posting charts, showing the div, showing what was going on, showing the high deviation levels that thing was hitting on the daily, going, hey guys, take your profit. Instead, they're like, no, this is the people's crypto. It's going to the moon. It's never stopping. We're all going to be billionaires. Meanwhile, the guy that put $8,000 into SHIB, whenever, way back when, and made like $5 billion, don't be shocked if you see one of the biggest distribution patterns you've ever seen in a cryptocurrency when this guy starts selling all this off for his profit. So I don't know if it's still pulling back today. I haven't looked at it. I wouldn't be a bit surprised, though. It could be pumping again. Who knows? These cryptos are crazy. And you get a FOMO rocking, but you got a guy that's sitting on all that. I'm foaming at the mouth. I'm setting limit sells at different levels, and I'm distributing all over their faces, man. That's what I'm doing. And I'm taking that money, $5 billion? You shitting me right now? I'm never freaking turning another computer on the rest of my life. I'm buying a freaking island, and I'm sitting in a hammock drinking freaking margaritas. That's what I'm doing. I'm not trading anymore. He hit the fucking mother load, man. Take your profit. Get the hell out. All right? Get the hell out. Stick like 2 billion, 3 billion into Bitcoin and go retire somewhere. Holy crap. Good for whoever the hell that is. All right. But yeah. Also, we're back above on this daily candle. We're back above. So if we do build this, if this does set, and we get this bear divergence between price action and returns, I'm going to be looking for the top side of these 95.4s for a pullback, right? Or at the most, maybe a backfill on the candle and then a pullback back up. Got to pay attention to this stuff. People that have these indicators, figure out how to use them, right? There's people in our Discord, right? They have these indicators. I never see anybody posting charts with them. It's not the easiest thing to figure out. You should really be figuring it out, 100%. And here's another thing too, is what's going to be powerful. You're going to be able to take this when you get your, everybody will probably set up their trend machine a little differently, right? When you get this, and then you're looking over here on these projections and on price action volatility ranges, you're using all these areas as confluence with all the other levels. And when you see all this confluence build up in one area, first off, no, it's a magnet for price action. And there's a high probability you might go to that area, whether it be to the downside or to the upside. This is what I do at the beginning of every day, especially if I'm in an active trading session, right? And I feel like trading. So remember that. It's all about confluences with these probability levels and this trend machine we're building and price action volatility ranges, right? Look where we pulled back from today. Here was the new daily range. Look, we open up. Where's this wick go to the dollar? And then immediately in an hour, pump, right? Where does it go to? It bounces right off the center of the daily volatility range to the literal dollar. Was that the low for the day? 61.69. The center of the daily volatility range was $60,174. The low was $60,169. We're talking about an asset worth $62,000 and it hits it within $5. I can't say anything else. If people don't get it, hey, they don't get it. I will always have an endless supply of people on the other side of my trades, and so will the high frequency trading algorithms. And those are the people I'm trading with. I'm not trading against these algos. That's like, just build a brick wall in your backyard and every morning just go outside and run full speed right into it, right? Knock yourself silly. You won't lose any money. You might have a headache, but you're not going to lose money trading against these algos. What's it do? It runs right to the top of the 68.3 Laplace distribution range on the daily. Right to it. Gets a little bit above, pulls back, opens up a new 15-minute candle, rejects again, comes back down. Where does it come back down? 2, right? This is the 4-hour candle here, correct? Here was the first standard deviation on the first 4-hour candle of the day to the downside. Here was the first standard deviation, normal distribution to the top side. There was the second, right? So when we get this pullback from the 68.3, and that wick almost got to the 2SD on the 4-hour candle, which is a 95.4% chance that price action is not going to exceed that level. It pulls back and bounces to the dollar off of the top of the 1SD, then has a nice little pump, gets price action, get both these times too. Price action is back inside the weekly price action volatility range. Red dotted line, dotted line, yellow dotted line is the center. That's where we're messing around right now. The center of the weekly volatility range and the top of this, 68.3 Laplace distribution range on the daily. So we get this rejection. We open up a new 4-hour candle. It drops below the bottom of the weekly volatility range. Tests it a couple times. Whoop, whoop, whoop. then comes back down, gets outside of the 1SD. Okay, well, there's a 68.3% chance this price action bounces and comes back up inside, right? What's it do? It almost gets back to the bottom side of that 4 hour 68.3 and then dumps right back down to the bottom of the daily 68.3% Laplace distribution level. Okay, look at this wick right here, though. It also retests the top of the daily volatility range, pretty much within a couple dollars there. We mess around down here through these 4 hour candles, right? Testing the bottom side of this 68.3. The algos are just sitting there going, nah, we're going to pop it up from here. We open up a new 4 hour candle. It shoots up to the 4 hour 68.3% Laplace distribution range almost immediately. Second 15-minute candle pulls back within 45 minutes to the bottom of the 68.3 Laplace distribution range. Get another little move up to the top side, little boom, bam. Where does this 15-minute candle close? Right at the center of the price action weekly volatility range. We get a quick little pullback, and then we open up a new 4 hour candle. It immediately goes to the top side of that 4 hour 68.3% Laplace distribution range and tests the first resistance level of the daily volatility range. Pulls back, right? Where does it go to? First, it tries to stay above the center of the weekly price action volatility range, but then just drops down. And now we've been just bouncing off the top side of the daily 68.3. Now this is where we're at right now. Okay. And at this point, I'm looking for, now we're going into the weekend. Keep this in mind, though. It has been months since Bitcoin has done anything on the weekend, right? Which kind of tells me that there's just more institutional involvement. When these guys leave for the weekend, they're loading those algos up, man. And they're going to, go back and look at the price action charts over the weekends to where on Sunday, 3 p.m. Pacific Standard Time, when the institutional futures open back up, price action has been right there almost every end of the weekend. There might be a little fluctuation, maybe Bitcoin ranges in between the 1SDs or something on the dailies, but most likely in between the 68.3 Laplace. But the price action has been like right back there as soon as they open back up. Then a move starts. What you saying, Donnie? He's like, run it, Bilbo. So yeah, that's what we're looking at. And this is how we use this chart, right? It's our alpha volatility range estimator, and then we add on distribution levels, Laplace and normal distribution. And it's literally, it paints you a picture. Why, everybody else scrambling around, trying to figure out what MAs these things are going to hit, whatever you're using, right? Oh, is this a start of some freaking Wyckoff formation? Is this some Elliott wave, your money goodbye formation? Volatility's creating it all. That is the bottom line. That's what I try to get into people. It was like, I'm not going to knock you for trading this stuff. Why not go to the source? Why not go to the source of what's creating all of this? Doesn't it make sense? But usually when I make it sound that simple, people are like, oh no, that's way too simple. I want to complicate my life. I want to figure out this really, this other stuff. And it's like, knock yourself out, man. Volatility's creating it all. Bottom line, volatility's creating it all. The entropy, right? The correlation of the entropy to price action. It's going to tell you when you're dropping out of randomness into trend and what way the price is going to go. Look at the chart. All you got to do is look at the moves that are trending. The blue candles are trending, right? Everything else is randomness. This is why I say, literally, I've seen it changing a lot lately. I'm going to say 75-80% of the time, cryptocurrency, it's random, man. It's just random. The entropy is going to tell you when you're trending. And the volatility is creating everything that you're seeing. Everything. I don't care what way people are trading. When you figure out how to read the volatility, you're going to have a leg up on 99% of the other traders. And it's even higher than that. Because that's how small of a group of people do this. You know who's really doing this? The high frequency trading algorithms. That's what they're programmed with. They're programmed to follow these levels, right? All the distribution levels, the volatility, the statistics, right? Our Wolfsbane indicator, which is really powerful, showing divergence between price action and returns. Whether it be the Z-score, which is the area that you see, right? The cloud, for all you people that like to call it the cloud or whatever. That is the Z-score of log returns. The white line, that's our returns oscillator. We're always looking for divergence between price action, right, and the returns. 4-hour chart, right? There's been bear div building, right, between price action and returns. Look at this little move right here, right? Boom, boom. High, lower high. High, higher high. Bye-bye 4-hour candle backfill. Right to the downside. But at the same time, from back here at these lows, right, you're building hidden bull. Right? Higher highs, lower highs, or lower lows, sorry. Lower lows, higher lows. Jesus, sometimes I confuse myself. Z-score of log returns actually looks good. Right? On the 4-hour variance, still heading up, positively correlated. So we'll see how this plays out over the weekend. We've got our alpha volatility Z-score down here. Okay, it's expanding, positively correlated. Although, yeah, it's heading back up. All right, and it's significantly positively correlated. That's when you're going to get your best moves. All right, let's see here. Like over here, right? If you're looking at our alpha volatility radar, this is the correlation line of the volatility expansions and contractions and expansions and contractions. And when you understand how to read all this, when you understand how to read the expansions and contractions and the breaks in correlation, and not only on one length, but 3 lengths, I can literally tell you what the candle looks like. I've done it a million times. I don't need to do it anymore. By having these 3 lengths, why do I have 3 lengths? Because I can tell you whether you're going to have a doji, right? Whether you're going to have a big bull wick on the bottom of a freaking candle or a big bear wick on the top of a candle. That's why. Because the different lengths are going to tell you. And on this correlation, the outside line of the correlation, when it turns green, it's telling you there's significant positive correlation. When it turns red on the outside, it's telling you there's significant negative correlation. And the green and red on the inside is literally just telling you whether the correlation is heading to the top, up to the top side or to the downside. All right. So what is that, the 4-hour? Yeah, the 4 hours still, it's having an occurrence too. When the inside variance turns pink from white to pink, you're having a statistical outlier, right? And a statistical outlier is telling you there's a fat tail event. Let's see. But you can also, this can turn to the downside. This can turn to the, literally can turn to the downside. Now, obviously, you're going to lose the statistical outlier when it turns back down. But this can turn down right now and stay positively correlated. Price action is going to leak out and start walking down. Because when volatility heads down, look, that's why you got this big, I mean, we have this big candle, right? We turn, variance starts to contract. Right here, it was positively correlated coming back, so you get this big move down. But then right there, it turned negatively correlated and sucked that candle right back up, because that's telling you the price action is going to walk up. And that's what this whole time, these 2 candles kept this price up. You can see that 4-hour candle walked up, right? Powerful. Let's go to a higher time frame on it daily. Let's see what the hell's happening up here. Variance is slowly going to the upside, positively correlated. The Z-score of historical volatility. Let's take a look here. Yeah, this hasn't made up his mind yet, right? I mean, it's pretty flat, positively correlated. Kind of telling you that that's holding price action back, to be honest. You want to see an expansion in historical volatility. This is the Z-score of the historical volatility. You want to see that Z-score turn to the upside and go positively correlated, and you're going to see a big move. We're getting some bright green candles. Even though the correlation between the entropy and the price action is heading down, we're getting some bright green candles telling you that that correlation is increasing, and we're dropping back into trend. It's trying to drop back into trend. It's still random. So let's see here. I like seeing you. We want to see some bigger DLP candles. We want to see this. But to be honest, this might not be happening until after this weekend. Right? Could just be another weekend. But God, man, there's so much FOMO and hype right now in crypto. Who knows? These crazy people might have all these shit coins drag Bitcoin to the moon. I mean, we just don't know anymore. It's insanity. Total insanity in the cryptocurrency markets. Let me go to the stream chat real quick here. You're fasting? Good man. Me too, buddy. Every Sunday I don't eat. And like once a year, I'll do a couple week fast. Let's see here. You'll do a 5-day? Nice. Just water probably. Sometimes I'll do like a 5-day juice fast. Where I'm just juicing. Just hammering my body with a bunch of minerals. Let's see. Yeah. Oh, ha! Yeah, that new Indie is. Oh, Andy got. Oh, you monkey. You got the new 49-inch, huh? Oh, Lord have mercy. Split screen on the C. Yeah. Oh, buddy. I'm going to have a couple of those. I just got to get back to my crypto cabin. Yeah. Flash. Oh, really? And remember, Sayron pointed out the flashing going on the 15-minute, right? The last time we had it, like yesterday, was over here, right? We were flashing right here, and he was like, oh, there's something getting ready to happen. It sure did. Whoop! This was all the options, right? All the options, just madness going on. So we're getting a flash on the 15-minute. Above the power means, right? There's two of the power means right here. Above the wave trend, right? Let's take a look over here on the Wolfsbane. Let's see what's happening here. We're negatively correlated. Looks like the historical volatility. I mean, it's still sloping up. It's actually starting to turn back up. Interesting. The correlation, we are getting a nice, we're getting a light green candle here telling you that the correlation between entropy and price action is building. So, but we are total random right now. So what's that telling you too? It could go, I mean, this thing could do whatever the hell it wants, right? I'm looking, we're flashing down here on the high length AVR and it's positively correlated. But you can see right here, this is kind of flat volatility. It's expanding a little bit. We got negative correlation expanding a little bit. So there's a battle going on right now. This is going to keep the price up probably until we do get a decision made. But if you see, if I'll tell you what right now, what time is it? If we get a bunch of volatility that comes in right now, from what I'm seeing on this high length one, these are probably both going to flip positively correlated on the 15-minute. And we're going to get a nice little pump here coming into the end of the day. Let's see. Dun, dun, dun. From that, yep, from this little, there is a little bit of hidden bull div too right now. And we're turning up. Z-score's turning up. Returns oscillator's turning up. Variance is flat, negatively correlated, saying that price action is going to walk up. Here's this move we had earlier, right? Boom, boom, boom. Here we go again, right? Little pop. Let's see, what was their divs building? Is that a little div? Nope, nope, nope. Clean, real clean. That wasn't divergence, right? There's no div on the bottom side of these indicators, whether it be the returns oscillator or the log return Z-score. You can see all higher lows, all higher lows. Same with over here on price action. Now, now if you go all the way back here, When the returns oscillator was right here, there was some bull div, or hidden bull div. So this will be interesting. But look how the Wolfsbane indicator works, right? Blow it up a little bit. The Z-score pops. It turns up. Same time returns oscillator turns up. Then the variance goes sideways just for a little bit, and you start to have an outlier. Boop. Variance pop to the upside, positively correlated, having a fat tail event. And the Z-score of log returns and the returns oscillator are heading up as well. Beautiful thing. And historical volatility expands, positively correlated. DLP. But you can see there was no div anywhere, right? So you wouldn't be able to really front run that move until you saw what was happening over here. I would wait for the variance. I'm going to let the variance tell me what was going to happen with that move. You can see the low length right here, right? It was the only one really flashing. Only one really flashing. And we get this candle right here. Boop, we get a quick pop down, then the expansion positively correlated, and it rides it all the way to the top side right there. And then we get one more candle walk up, right? It starts actually, that was expanding. There's the contraction. Okay. Yeah, that's interesting. But that's why you drop down here, right? You're having this expansion on the mid-length. Right about there, it's still positively correlated. But if you're playing the variance move, hell, I mean, you're out of the trade after that. Probably after this candle right here. If you're just scalping that volatility. Let's see. Yeah, from back there. Yeah, we do, man. Good eyeballs. I didn't go back far enough. Say Ron, turned into a div master, right? Lower lows from this 15-minute candle right here. Boop, 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 boop. And I guess it has been building. I don't know why I didn't go back to that low. I'm looking up here. What's that saying? You can't see the forest because of the trees. Yeah, it's bull div, for sure. From this point right here, these are all higher lows. And from that point right there, these are all lower lows. So that builds over time. You can see how it built right here, right? Boom, boom, boom. We get this little 15-minute pop, but it's building again, and now it's turning up. Hey, dude, does the variance turn up here? Does this thing run? Possibly. Yeah, we could be getting ready to get a nice little pump here. Time is it? 41. Let's see what happens in 4 minutes on this 15-minute candle. Until then, what's happening on the 90-minute? Yeah, historical volatility is definitely contracting a bit. Pop negatively correlated. So is the variance. Variance is coming down. Negatively correlated. We are getting some green candles again, but it is a dark candle on this 90-minute. But we've been flat, right? It's creating a doji too. So let's see. Positively correlated. Flat volatility. Telling you price action is going to walk down. Positively correlated contraction, saying it's going to walk down. But then this is interesting. I mean, actually, from where it started, we had a little expansion right there. Yeah, there should be more of a bear wick on this, but you can see it's a nice doji, and it's actually starting to push to the upside. So let's see how this plays out. When do we get? We get a 2-day today. And I already know there's on the 2-day, right? I mean, this could wait though till the weekend is over. But I mean, this thing has just been building hidden bear or hidden bull. Just been building hidden bull. Bum 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 bum. The variance is coming down, negatively correlated. Flat historical volatility, negatively correlated. I like the entropy, right? I mean, we are coming back down, so got it on 20. Yeah, we get a new 2-day candle today, going into the weekend. About the 3-day. Tomorrow. Yep, tomorrow we get a new 3-day. Oh, I like that the 3-day candle, right? I like it. Nice and bright green. Let me go to the index. Some more history. There we go. Yeah, we're dropping back down in the trend on the entropy. Bright green. I mean, and I've been waiting too. I'm just like, hey man, is Bitcoin ever going to make a move on the weekend again? Right? Who knows? But really, if you're trading the low time frames and you're scalping volatility, I mean, you can get price action just ranging in between the Laplace 68.3. You can get some good trades. So it's not like you cannot trade you can't trade the weekend volatility. It's always there, especially if you're trading these low time frames. Let's see, 1 hour. What'd you say, hidden? Yeah. I mean, from this point, these lows right here, from back here, no, right? Because there's the low on the returns oscillator. This is definitely a higher low, just like the price action candles. But like everything I was just seeing, yeah. I mean, that's a good call on the 15 now. I mean, I didn't go back far enough. I'm on stream too. Trust me, if I'm sitting in front of my computer trading this, I'm seeing that bull dip. What's a 5-minute look like? Yeah, historical volatility heading up, positively correlated. Yeah, I mean, look at the bull dip on the 5, right? Right here, even back here. So we're getting this little pop, but now, no, not really. From way back here, at these highs, I mean, there's some hidden bear. But remember, we're on a 5-minute chart here. Look at this crazy entropy. Yeah, nothing yet. Something's about to happen now. Something's about to happen. I mean, right? We had this little 5-minute boom, boom. Well, all the 5 minutes were flashing. Especially when you see the high length AVR flashing too, just get ready. And we're on a 5-minute, so it might not be a massive move, but when we had the expansion, right? I mean, hell, if you would have been able to, let's see here. Yeah, you can see the bull dip for that 5-minute move, right? Boom, boom, boom. So it's bound to take off. Same thing. You're seeing it on the Z-score too. You're seeing the bull dip on the Z-score. And so at the same time, you're seeing the 2400 flash. It created, I mean, from the bottom where you could have front run it. You could have front run it for sure because of that bull div. We're talking about 61, little over 9. $800 move on the 5-minute. Not bad, right? This is why we scalp the future with the futures delta. And when you learn how to read that div really well, you can front run these positions. But at the same time, as soon as you learn those 3 rules, you're going to be a happy camper. That's all I can say, right? If you limit your losses and you're getting good entries because you understand the divergence between price action and returns, you understand the volatility, and you're going to maximize your profits on the trades, it's a no-brainer. Especially if this thing went the other way, just get out. Just get out of the trade. Take a minimal loss. Your gains, because you understand volatility, are going to be a lot bigger, and they're going to stack up because you're getting good entries. That's the problem with people that trade some other ways, right? It's hard to get a good entry. That's the biggest problem, especially in volatile cryptocurrency. We all know, man, this thing is just a monster. Monster! What was going on way back on that move? Oh, bull div. That's for damn sure. Let's see. Is there any on? No. What time was that too? It was 0800. It was right about when I was crawling out of the freaking nap cave. Where that thing went to the top side, which is a bummer. I wanted to get a little early morning trade there. It was right after, about an hour and a half after traditional markets opened up. Anyway, time is 2:48. Anybody got any questions? Anybody got any questions? Oh, hello. I see we have the majors in the house. Hey, look out. Living the dream. Yes, sir. Present. And of course, caught the African crypto warlord in between his goat herding sessions. That's beautiful. Fighting off the neighboring tribes. Beautiful thing. All the fun folks are in the chat. Love it. Love it. Let's see here. Before we close out the day. Let's go over here. Actually, what am I on? Let's go on the 15-minute. Let's get some verticals. Okay, yesterday's close. Where are you? Are open, sorry. Oh, way over here. Good Lord. Boop. Right there. Let's change that color. Hey, there you are over here. Good. We want green. And I want a solid line. And I don't want it that thick. Give it all. I want it all. Okay, so there's the beginning of the day. Right there. Everybody already knows what I'm doing. Let's see where this new price action volatility range is going to be. 1700 hours. Bingo. Well, you can already see where all the volatility's at, right? These wicks. I would. Yeah, I mean, especially price action stays right around here for a couple hours, but I mean, a little late day pump. Where's that freaking? Where's the daily 1SD at? We haven't made a run at that. What's that up there at? 63.7. That'd be nice to get a run up there, or to the top of the weekly volatility range. That's what I like, though. Let's go into the weekend inside. We don't want to close below 61.7. We don't want to close below the bottom of this weekly volatility range. We close in this weekly volatility range, things can get fun. Why do I say that? Well, here's the 15-minute chart here too, right? And I'm where am I thinking this daily volatility range is going to be at? It's going to be firmly inside of this weekly volatility range. So this price action could drop down, bounce off that daily range, and maybe make a little run. Do I think that that's going to be the start of this big move? Just going off of, and now this is just blah, 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 right? Because it's not like, well, I'm going to go on. There hasn't been a weekend in months where this thing is pumped and left some big gap on the freaking institutional futures traders. But I'm just saying, if it was going to happen, one thing that could happen this weekend with retail trading FOMO is some of these freaking shit coins. Did you guys see that freaking pump and dump on that other, what the hell was that other shit coin? Little offshoot of Shiba, I think. Forget what it was called. I mean, people got so wrecked. I feel sorry for these people because they believe some hype. Hey, this is the people's crypto. It's going to the moon. Holy shit. Put all your lunch money into it, right? What did grandma and mom and dad give you this week for lunch money? Throw it all in this crypto. Going to the moon. Then they provide all this liquidity for these algos. They run it up, people FOMO into it, and then in one 15-minute candle, it just goes right back where it started. And people are like, I don't know what just happened, but I just lost all my lunch money. How am I going to eat this week? Crazy, man. Crazy. It would be nice to close. I'll tell you what, we run up to this 1SD. That's going to pull the daily range above the center of the weekly. That'd be real lovely. You see right now, it's causing some resistance, right? Because this is these algos know where these areas are at, right? And these bears are going to defend this area. It's going to take a nice push to get up through this weekly volatility range. It always is, right? Always is. There's always going to be resistance from the other side, whoever it is. Let's see. So yeah, I mean, we pretty much just ranged today. But I saw somebody say tight range today. That's not really a tight range. I mean, what is it? 59,950. I mean, take that back. I mean, hell, it's because I don't have this. Let me see. Is that 59,950 right there? Yeah, there we go. That's better. So, I mean, it's about $450 range. To see a real trending day, I like to see that under 200. Half that. Nice, tight one. And the best trending days you'll see is when this thing's like $50 range and under, right? We've seen weekly ranges that are like $5, crazy shit like that, and you just get this major weekly run. That's why we love this indicator. It just tells you, you know, there's a high probability you get a trend. There's a high probability you're going to get a range of that day, depending on what that daily volatility range looks like. Good stuff. 254. So yeah, that's where I'm seeing that at for now. Right there above the bottom of the volatility range. Depending on what happens here, you know, we run up here at 63, whatever it was. At 1SD is like up in this area. That's going to pull this bed. That's going to pull it up. It's going to pull it up big time. So you just have to pay attention. What's happening here? Yeah. Going back up in randomness. But to be honest, this thing's probably stay random. It's probably going to stay inside this weekly. I mean, traditional markets are closed, right? What did they 62,785, right? Yeah, closed right up here. Right up in this range. So, I mean, high probability by Sunday, 3 p.m. Pacific Standard Time, my price action's right back in the same place. Just going off past data where, you know, it's almost like these guys are just firing up those algos. But they're trading on these other exchanges too, but they want to keep the price right around there, right? Just need a big retail push on the weekend, and I think it's going to come in all these little pump and dump coins probably. That's probably what's going to happen. But yeah, I like Bitcoin long term, obviously. Really think this thing's about to pop to the upside. We get through October right here. It's going to get powerful. November's probably going to be off the hook. That's what I'm saying. When I was over there on, you know, on these projections, for crying out loud, on that weekly, I mean, that's the thing. What does Bitcoin do? Right? It just all of a sudden, wham! And a lot of people get left behind. Right? A lot of people get left behind. And all of a sudden you're like, holy shit, I can't believe Bitcoin's over $100,000. Just like when people are like, oh my God, we busted right through 20K. Where are we going? Holy shit, where'd I go the first time? 43, I think. When it busted 220, it just, woo, let's go to 43. Then it had pullback. Then it rocketed up again to like 50-something, 57, pulled back. And then it rocketed up to 65. It's not going to be an easy path for these retail traders. But if you're trading volatility, probability, and statistics, You're going to be trading with the smart money, and the smart money trades with algorithms that are programmed with the above aforementioned. Period. The end. I can't make it any simpler. There's a guy. I haven't heard a peep out of him either. Coding Jesus. Hell, they might have assassinated his ass. Ever telling retail traders all this shit too. He's literally a quant developer, I'm pretty sure. He's telling people the same shit, you know. Hey, hello. These algos are programmed with probabilities, volatility, all this good stuff. So that being said, shout out to you, Coding Jesus, wherever you're at. I'll light a stick of incense for you, buddy. I'll light a stick of incense for you if you're no longer with us because the high-frequency trading firms and the hedge funds found you. I'm sure they're looking for alpha trading too. Screw them. Screw them. All right, guys, if you're watching this on YouTube for the first time, congratulations, you found us. We appreciate it. Subscribe to our channel, right? Like the videos. Leave us a comment, right? The link to our Discord is in the description. Follow the welcome message. It'll tell you exactly what to do to get into the main server. And I want to thank everybody watching live in the Discord. Appreciate you guys. So I'm not on here talking to myself. I'm doing it anyway. And when I'm not online, I'm doing it anyway. And the dogs think I'm crazy. They probably know English by now. They speak English when I leave. But wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. All you Wolfpack traders, be looking. I'll probably, especially if you see some action happening in the market, look for a live stream going on in the Wolfpack chat. And I'll talk to you guys later. If anything, Monday, 2 p.m. Pacific Standard Time.